I think the conservation community, in thinking about finance, have in the main so far thought about finance for conservation. Yeah, how can we raise money to spend on conservation? And that is a completely legitimate activity, but it is small beer, one would say in English, maybe small change in North America.
Welcome to Mongabay Sessions. I'm your host, Mongabay founder Rhett Butler. In this series, we'll be interviewing some of the world's leading conservation thinkers and doers about their experiences and what can be done to make the world a better place. Thank you for watching, and I hope you enjoy. And today for Mongabay Sessions, I am speaking with Simon Zadek, the chair of Finance for Biodiversity. So Simon, it's great to have you here. I'd love to hear a little bit about your background in terms of what motivated you to get involved with sustainability.
Sure, very, very pleased to be with you here today. So right now I'm the chair of an initiative called Finance for Biodiversity, and we'll come back to that in a few minutes. In our earlier conversation, we chatted about how I got into this, and of course it depends how far back you go, since I'm many decades into my life. But I would say what kicked me off was a book, and it was a book written by a guy called Anthony Sampson back in the 60s called The Sovereign State of ITT. And ITT, as you'll probably know, was a very important US telecommunications company. And The Sovereign State of ITT was effectively a journalist's book on the lack of accountability of large corporations. And so I would say I got into the sustainability space through an accountability lens, ethics and justice, rather than, for example, environment and climate. And it's only really in the last 8-9 years that I've significantly swung from a focus on social and economic aspects of human justice issues, labor standards issues, into environmental, climate, and now nature. So I guess I've come to that somewhat late in my work, having come from that sort of corporate accountability background originally.
So you've been associated with a number of reports that have come out recently, and you mentioned Finance for Biodiversity. I'd like to jump into that a little bit. So you just came out with a report that was really speaking to development finance institutions, and I'd be interested in hearing kind of what would be your top takeaways from that report, and what would you hope that development finance institutions, what actions would you hope they took after seeing that report?
Sure. President Macron and Secretary General Guterres co-hosted a meeting last week called Finance in Common, and it brought together for the first time the world's development finance institutions. And by their measure, there are 452 such institutions, obviously many different sizes and approaches, with a combined balance sheet of $11.2 trillion. Just to put that in perspective, total global capital markets, financial and capital markets amount to about 350 trillion US dollars. So it is not an insignificant amount. It's a load of cash, in fact. And so we did a piece of work that asked the question quantitatively for the aggregate balance sheet of all of these DFIs. To what extent is their lending dependent on vulnerable nature? And can we quantify financially the nature at risk as a result of their lending practices? And of course, all of these numbers are fairly high level and are subject to margins of error, but the answer to both questions was yes. And we found that over a third to a half of the overall balance sheet was highly dependent on vulnerable nature. So ecosystem services were being drawn on and often not paid for in order to make those loans profitable or useful for those who had borrowed the money. And we found that nature at risk of that $11.2 trillion amounted, in our estimate, to about $1.1 trillion worth each year out of a total of about $2.25 trillion lending each year. So whether the number is 100 million that way or 100 million the other way doesn't really matter. You know, the core of the story is the world's most progressive development finance institutions are highly dependent on vulnerable nature and place significant nature at risk through their lending practices. So then you come on to the what on earth is going on? And the answer is even many of those DFIs that have embraced at least the mitigation side of climate change and do climate stress tests of their balance sheets, there are few that go beyond individual project analysis in doing a balance sheet wide analysis of where nature fits into what they do. So our first and foremost recommendation, perhaps a little geeky, is that every DFI in the world needs to stress test their balance sheet for how dependent they are on vulnerable nature and what nature they put at risk. So an analysis of really where nature fits into their lending portfolio, and they need to report on that publicly. And we think since almost all of these DFIs are in various ways owned by governments, it should be government policy that needs to be increasingly progressive in terms of net loss or zero net loss or positive, that drives these DFIs to really align those policy frameworks with how they're approaching the nexus between nature and lending.
And so you mentioned an important qualifier, which was progressive DFIs. Do you see DFIs in places like China, which obviously is making big investments in the Belt and Road Initiative? Are there opportunities with those sorts of institutions?
So, progressive can mean many different things, obviously, but you're right to question the range across different jurisdictions and types of sort of public development banks, if you like, or DFIs. The Chinese Development Bank, I think at this point I'm right in saying, has the largest balance sheet of any DFI on the planet. And clearly that is only one of a number of Chinese financial institutions that are linked to strong policy mandates, including obviously the AIIB, but also some of the state-owned banks and state-connected asset management companies. Clearly, they represent a significant source of financing across the Belt and Road, and that has huge implications for what kind of development will happen down that massive swath of countries that in 20 years' time, if left unchecked, will have the highest level of carbon emissions of any other part of the world, that group of countries in aggregate. And so clearly pushing Chinese financial institutions, who remember are often collaborating with many other financial institutions from the West and elsewhere, pushing them to take nature and broadly climate into account is really critical. I think the opportunity is there because the Chinese government clearly has an interest not only in contributing to the public good, but also ensuring that their lending does not lead to either poor political or reputational outcomes, or indeed delinquent investments that fail because of their codependency on vulnerable nature that doesn't stand up to the stress. So I think progress is absolutely possible, but very challenging if one is trying to build international cooperation at a time where the conflict between China and other parts of the world is clearly on the rise.
Yes, I mean, on the conflict issue, living here in the US, the past 4 years have felt like kind of a lost period for progress on, I guess, climate and biodiversity conservation. And I'm curious as to whether, or like where you see the most action occurring right now in terms of advancing these ideas.
So, it depends what your metrics is, inevitably. But let's look at the largest flow of public finance, just for a second, in a short period of time in the history of civilization. And that is clearly the stimulus programs that have been announced in the context of COVID, and that have flowed to the tune of, or commitments to, about 12 trillion US dollars, moving rapidly across the global economy, particularly obviously in larger economies, both so-called developed and larger emerging economies like Brazil, South Africa, China, India, Malaysia, and so on. So Finance for Biodiversity has done a rating, turned that into an index of the nature friendliness, if you like, not so much of the flows themselves, harder to track, but of the commitments that have been made. In other words, how much money and what the plan is as to how to spend that money. And the results are not very positive. You know, we've covered now, I think, about 4 or 5 trillion US dollars of stimulus. We've covered all of the G20 countries and all of the European countries, plus a few more. And the bottom line is that only 3 or 4 countries out of that total really show any positive, really strongly positive side to the way in which the stimulus programs are linked to nature and climate. And the vast array of those stimulus programs are either neutral or negative, not necessarily deliberately negative, but because of bailouts of, for example, fossil fuel or transport intensive industries. We see perhaps the usual suspects, so the likes of the UK, other parts of the EU, that have tended to have a stronger green in their policy commitment associated with their stimulus programs, but really across the board, it is a very poor showing. So one doesn't have to look at some grand theory of finance or every corner of the global financial system. We can look at this tsunami of money that is moving at the moment and already see policy-driven finance that really not enough is being done to ensure green outcomes.
I noticed the 2 countries that Mongabay covers a lot, Indonesia and Brazil, both scored fairly poorly on the index in terms of the stimulus.
I could just go, yes, you're right, and leave it at that. Obviously, it is very difficult to compare, I don't know, Belgium with Indonesia. Yeah, these are almost on different planets in terms of the kinds of economies they have, the level of wealth they have, the extent to which they can actively intervene in carbon emission related industries, or indeed actively intervene in the way in which nature is being impacted. Frankly, Belgium doesn't have a lot of nature left and is largely a service-driven country. And Indonesia has huge swaths of nature which are complex at multiple levels, both biologically or scientifically, and also in terms of how they're being used across the board. So, it's fine doing an index, it kind of demonstrates a kind of piece of the story, but one shouldn't get too refined. So it shouldn't come as a surprise to us that Indonesia and Brazil, perhaps struggle most or more than others to really figure how stimulus programs that really need to be focused on bringing people out of poverty very, very quickly may not pay sufficient attention to the green side of the story. But perhaps that changes as we move from stimulus to recovery. Yeah, because when we start thinking about recovery, one's talking about somewhat longer term financing, not emergency money out of the door to enable people to buy food. And there, one would expect the likes of Brazil and Indonesia to step up to the plate and really show that there are structural transformation drivers built in to the way in which they're financing the recovery.
Yeah, so on that front, how do you drive that change and towards a greener finance?
Well, multiple routes. Obviously, it is a set of policy drivers that determine largely where public financing goes. Let me perhaps turn to a different part of global finance, which is debt. and specifically sovereign debt. So as those who follow the news, at least in the financial press, will be aware, the pandemic has brought with it not only economic chaos and downturn, but also a growing crisis in the sovereign debt market, and in particular in sovereign debt that has effectively developing countries as debtors. Their exports have collapsed. They are struggling to move their economies forward, and yet they have debt repayment schedules that lead to the potential of debt failure. So just being unable to pay their debts, with all kinds of longer term implications for those countries being able to access international capital markets in the future. What's interesting is that over the last 3 months, we have seen a number of initiatives emerging that are trying to connect the dots between debt relief and debt restructuring on the one hand, sovereign debt, and what it takes to use some of those funds unlocked to enhance climate and nature outcomes. Now, on the negative side, that can be framed and seen as just a new form of conditionality. We're open to providing debt relief if you do X, Y, Z, on the green and biodiversity side. Yeah, and clearly there will be pushback, and sometimes rightly pushback, if funds unlocked through debt relief are being forced into nature investment rather than, for example, helping people who are on the brink of starvation. That would clearly be a catastrophic approach. And at the same time, it does seem possible that in the context of what may be significant debt relief that is provided to a growing number of developing countries, deals can be made where financing can be linked not only to the immediate need to help people, but also that longer term transition that will boost economic productivity because it reduces carbon emissions and supports the role of natural capital in driving prosperity. And we've never really seen that play out in the sort of so-called Paris Club of sovereign creditors or discussions happening at the IMF and elsewhere. So this is really the first time deals like this are seriously being discussed. And I think the forthcoming presidency of the G20, which will be held by Italy, starting from the 1st of December, so in a few days, will be an important venue where this discussion happens. And if it moves constructively, then we could have a situation where we can find that sweet spot between making significant debt relief move forward, so alleviating short-term pain, and at the same time unlocking finance that can support that green transition that we're all understanding that needs to be paid for and needs to happen at scale.
So you've, in some of the reports you've been associated with, you mentioned the idea of an instrument called a nature performance bond. Could you elaborate a little on that?
Yeah, so those working in the nature sort of finance nexus, will almost certainly know a lot about nature debt swaps. And there's a fairly long history of nature debt swaps, which is somebody holding a bit of debt of Gabon or Suriname or somewhere else, Seychelles, goes, we're willing to forgive X million pounds or dollars worth of debt. Yeah, and you need to spend that money or a big chunk of that money on saving the rhino or doing something, tree coverage or something of that kind. And that's debt nature swap. And although those swaps in a way are to be celebrated, money unlocked and so on, they have remained rather ad hoc, rather small scale, and have not always proved very satisfactory either for the debtor who has money that's tied to something they have to spend it on, or to the creditor in that they've given debt relief and perhaps the performance outcomes that were agreed for the future don't always come true. So interesting experience, but not terribly satisfactory. So really the question is, where do we go from here? And I think we've learned since 2011, which is when the green bond market started, that standardization is really important, that one needs to develop taxonomies and guidelines and standards and certification models that allow one to move from ad hoc plays, a little bit here and a little bit there, where everything is always negotiated uniquely, to a more scaled approach. And ultimately, the world's capital markets operate through standardization, where credit risk can be more precisely analyzed, where different types of levels of risk of assets can be bundled effectively and so on. And so we can move away from debt nature swaps and move into what we're talking about, which is nature performance bonds, which combines two different possible characteristics. One is a use of proceeds bond. So that's like a green bond. I promise to use the money on X, to what in the jargon is called a state contingent debt instrument, which isn't a state in terms of a country, but is the state of something in terms of the condition. In other words, you have to pay X interest rate unless you achieve this performance outcome, in which case you pay less interest rate. And we've begun to see so-called SDG aligned bonds emerging that are not just use of proceeds bonds, but state contingent debt instruments. We will deliver that outcome, but in return for that, we will pay a lower coupon on the debt that we've raised from you. And so the nature performance bond is a combination of these two pieces, and we feel can play a really powerful role in the context of the debt relief and debt restructuring that we hope will play out over the next year or two.
So looking out at the longer term, what would sort of success look like to you, say 10 years from now in this space?
God, I hope I'll be putting my feet up and not having to do anything at all. And I hope I won't have to have a mask on every time I walk out of the house. I mean, I can think of all sorts of measures of success, but not probably the ones that you were thinking of. So let's pick out a couple of pieces. If the umbrella objective is that one's seeking to align global finance with nature and climate outcomes, so let's take that as sort of, the North Star or the Southern Cross if you happen to be elsewhere on the planet, then what does that look like in a couple of instances? So let's take sovereign debt. If you're running a company, and you're trying to borrow money off me, I'm going to ask to see your balance sheet, right? And if you haven't got a balance sheet that's visible, I'm certainly not going to lend you any money. But in sovereign debt markets, there are no balance sheets. There are lots of credit rating agencies, but countries don't have balance sheets according to the world of finance. And so that's wrong. There are a number of pieces to that balance sheet, and natural capital is a critical part of it. So in 10 years' time, sovereign debt markets should always have balance sheets. Natural capital needs to be an embedded part, not just of one instrument called a nature performance bonds, but of the entirety of sovereign debt markets. That countries should be able to demonstrate social and natural capital balance sheets, as well as demonstrate economic and financial solvency. So I think that's achievable, and I think we have an opportunity to advance that agenda now, building on some of the work that's happened over recent years. Secondly, we have the lords of finance, if I can call them that, who are not folks running financial institutions, but are folks running central banks. So it's the folks who govern the financial system. And today, it's perfectly possible to have a government that passes a law that says we're going to do this about climate and this about nature, and for financial institutions not to have to respond because the central bank doesn't have to follow that policy guidance. The so-called independence of central banks means that they are not obliged to be in lockstep with policy. Yeah, now that has some upsides, independence, clearly, but it has some downsides in the context of the kind of green crisis that we're facing today. So we need, not in 10 years, but in a far shorter period of time, the world's institutions that govern finance to be aligned to the policy architecture of the countries in which they are hosted, whether it be the UK's Westminster or Congress or elsewhere. Otherwise, we will have a financial community that has a license to operate, even although it is dramatically at odds with the policies of the countries that are hosting them in practice. So we need to reconnect the dots there. And then I would add, maybe just as a third example, on the public side, the public finance, you know, we live in a digital world now, and it is perfectly possible, yeah, and we see this in some countries, that if a minister drinks a cup of coffee in a cafe and decides to charge it to the public purse, you know, 2 days later, that is on a website showing what that minister bought, how much it cost, and where they were, and why on earth it was charged to the taxpayer. You know, digitalization now allows that really with ease, along with all sorts of sortable, you know, and analyzable tools. So we need public finance to move in that direction. We need it to move towards a far more radical transparency, and we need to see how green in its various shapes and forms becomes a much more integrated way, a much more integrated aspect of the way in which public finance works. And again, this is not a weird dream or fantasy that I had in the middle of the night. There are many examples of where this is happening in practice. And yet when you look at the $25 to $30 trillion a year that constitutes the public finance of the world each year, it's a tiny portion that is sensitized, let alone transparent around its alignment to green objectives.
I mean, you're talking about nature, which is all encompassing. From my viewpoint, it seems like the finance sector has a decent understanding of climate change now, and sort of, you know, the externalities associated with it, and the fact we need to cut carbon emissions. But biodiversity always felt like something which is still not totally understood, or you know, there's the valuation models are still lacking. And I'm curious to hear your take on that issue, and how biodiversity is actually getting attention and receiving finance and being valued these days.
Sure. I remember at a meeting I attended in January this year, like a different world, before COVID broke out, I sat with a group of financial institutions and associations that represent many other financial institutions. And I argued the toss with them that they should be leading in looking at metrics and data and frameworks and standards and tools linked to nature. And the response was, this is January, the response was across the board, you know, Simon, you're absolutely right, but we are so bowed down by the challenges of trying to figure out the climate piece of this. And we've spent our political capital persuading our CEO and shareholders that it is reasonable that we are looking at this stuff more carefully, that we cannot roll another ball down the alley right now and now tell them that they need to look at nature too. This was back in January. That same group of actors, 10 months later, are about to produce a major piece of work on how to advance the data and metrics in measuring nature-related risk dependencies and impacts of financial institutions. But the last 10 months, has been in many ways a surprising uplift journey, as the financial community, at least parts of it, have really begun to respond to what many activists such as yourselves, have been arguing for decades, but largely with little effect. So I think we're seeing a rapid pathway up of an acceptance that nature is sort of the next in the tube, if you like, where the metrics and data and so on need to be figured out so that financial institutions can get real in understanding what those risks, dependencies, and impacts are. And one illustration of that is the recently launched Task Force on Nature-Related Financial Risk. So that spills off the tongue, very cute, which is essentially how should financial institutions, what kind of data should financial institutions demand from corporates that are, for example, reporting on stock exchanges so that they can understand nature-related risks. And some of you will know there's been an equivalent process called the Task Force on Climate-Related Financial Risks that has been running now for 3 years to some considerable success. And I am the co-chair of the technical expert group of this new initiative called the Task Force on Nature-Related Financial Disclosure. There are 70 different financial institutions involved, many governments engaging. It will probably be part of the conversations in the G7 and the G20 next year. That doesn't mean, Rhett, that this deal is done and that we've reached a successful conclusion, but it does mean that we're breaking through decades of cloth ear unwillingness to listen and respond, and beginning to move into how practically these organizations will take nature into account. I think the conservation community, in thinking about finance, have in the main so far thought about finance for conservation. Yeah, how can we raise money to spend on conservation? And that is a completely legitimate activity, but it is small beer, one would say in English, maybe small change in North America. The real game in play is how to align global finance, $350 trillion worth of financial assets in private capital and financial markets, $25 to $30 trillion worth of public finance spending every year. The real challenge is not finance for conservation, but aligning global finance with conservation objectives. We need to move away from this rather narrow focus on gotta raise some money to spend on conservation and realize that it's these far larger numbers that are really shaping nature outcomes, and it's those that we need to change going forward. So I guess that's perhaps obvious in what I've been saying for the past 20 minutes, but I think it's a critical message for the conservation community to make that jump into a more systemic view of how we need to approach finance.
Thank you again so much for taking the time. I really appreciate it.
Absolutely my pleasure. Thank you very much.
Mongabay.